Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's keep up the analysis of the euro currency. Yesterday, the major conclusion that we have made in the report was about the tricky situation that we have a bit contradictory patterns. On the daily chart we've got bearish grabber, on the 4 time frame chart we have bullish grabbers. That's a common thing when you're coming to release of the important data, which was a Fed statement. And by the market reaction currently you could see that it seems that, more or less, but this reaction tactically is dovish, and you can see rising of the gold market, some flat action and pullback, minor pullback on interest rates. On the euro currency also could see some upward performance, but in fact situation stands a bit more difficult than it seems on the first glance. And currently, guys, we are living in really interesting times. So tactically, indeed. So as it was some expectation that might be Fed change rate for 0.5%, and this hasn't happened, we could say probably this is dovish decision. But this is only what we have on the surface. If we take a look at the statement, Fed has made two important things. First of all, they have cut the forecast of the gross domestic product from the 4% to the 2.8%. It is for more than for the 30%. The nominal gross domestic product forecast has been cut. Second, they said that first they rise rate on all rest meetings in this year for 25 points. That leads to approximately 1.75 level by the end of the 2022. And if previously it was suggested that the terminal rate, guys, this is the level where Fed intends to stop rate rising, some kind of the sale for a current cycle of the rate change. It was suggested around 2%. Now this sale increased to 2.4, even 2.8%. And the term when the Fed intends to rise rates have been increased for a couple of years. Not only for the 2023, but even to the 2024. It means that the anticipation and view of the Fed, analysis of the Fed of the inflationary risks has changed. They are treated as more serious. And currently, with this combination, it's very low reasons for optimism, because just combine two things using the common sense. You have inflation approximately 8%. Actually, recent month-on-month data shows it stands at 12. But anyway, let's it be 8. And your gross domestic product return growth on average is 2.8%. It means that euro basis economy is contracting for 6, maybe 8% per year. So the United States economy generates negative return on the economy. In such circumstances, when you're rising rate, you make the more expensive all resources, starting from the money, and inflation additionally increase the performance that company should use to earn some return in their business. And that makes them also to raise their prices. So in the current circumstances, currently we could really get interesting results as soon as within a couple of months. Because although Jerome Powell said that economy shows great performance, currently low unemployment rate, good growth, good consumption, but we do not have yet a result of the recent geopolitical events, the result of the rally on the commodities prices in the statistics, because that has happened just by the end of the February. It's just a couple of weeks has passed since. So the first result we get only maybe in April, but more probable that it will be May, June. And there we will see what will happen. So our suggestion that rate increase hardly will help to stop the inflation in the current circumstances. But we will see what will happen. So that's why, although we have the bullish reaction initially, we treat it mostly as the short-term reaction of the speculators who have closed maybe some shorts, or just was tactical reaction, mostly as a result of the 25 basis point rate change. But strategically, in a more extended period, this, of course, not very good solution from the Fed for the other markets, because it makes dollar more expensive. It should trigger the action on the interest rates, making money more expensive. And that mostly, the new forecast from the Fed mostly is bearish for the other markets. It will become the headwind. Just they intend to accelerate rate change this year and next year. So that's just briefly what we think about the current statement. Of course, we were trying to dig it better in our weekly reports as usual. So what we could do currently on the technical side. First of all, on the daily chart, currently we see that the grabber that has been formed, now it is raised. So market has closed above the top of the candle. It means that we do not have any bearish grabber. This is, of course, the bullish sign. On the 4-hour time frame, potentially, we have this ABCD pattern with the COP around 111 approximately. OP stands 1214, and this OP, or this ABCD pattern, agrees with the fib level. So here we have actually the agreement, but currently, as you can see, both targets stands above the daily overbought, which means that hardly we will get it on this week. Overbought actually stands right at the COP around 111.20. It's the COP 111, so it's very close. So supposedly, based on recent reaction, chances exist that market could keep climbing to the COP and complete it. But based on the performance of the interest rate, performance on the dollar index in your currency as well, somehow we have the idea that it might be also the minor triangle is forming here. Especially it is good seen on the dollar index. So you can see, in fact, here, guys, we have the pennant that is forming right now, which is potentially bearish pattern. And that, in general, corresponds to the a bit more longer-term view on the fundamental moments that we have currently. On the dollar index, as I said, it looks even better than here. And appearing of this pattern on this collapse, it really could lead market to appearing, for example, the butterfly here to the downside. So when the market shows contracting action, it keeps door open for both scenarios, to the upside and to the downside. Since this type of action will rely mostly on the fundamental background, some fundamental reasons, my personal suggestion is just feel that it has more chance to happen to the downside. Just because currently in the recent statement on price performance and on the analysis of the Fed, I do not see something really positive. So situation in Europe hardly is better than in the United States. And from that standpoint, well, I'm really not exclude the chance that we could get the big butterfly, so that could become the left wing, and that's maybe the starting of the right wing. Besides, this performance, even despite recent rally based on the Fed statement, doesn't look very impressive. So this is not some thrusting action, it's a bit choppy and gradual, which makes me think that it's at least at this point it more looks like the retracement rather than starting with something of that sort, some rally. So COP may be reached, but I'm a bit skeptical currently on the reaching of the OP and moving higher. Maybe only if something additional news will be released, maybe some other events will happen. Situation could change, but based on the Fed background, hardly it is supportive for appreciation of the euro at this moment. That's why we keep on the table the possible COP reaching this week. Theoretically, it is possible. Currently, on the hourly chart, market has completed the ABCD pattern that we discussed recently. This is reaching OP, and in fact, we have the guardrail triple-2 sell agreement right here. So before upward continuation might happen and moving to the 111 area, we do not exclude chance that market could show retracement to the 110 or 995, 110. This will be just respect to the target, and it's usually when the godless triple two is forming, market usually shows at least the 30% pullback. So if you intend to take the long position, you probably could keep an eye on the possible retracement for taking the long position with a possible action to the 111. If you'd like to go short with the higher time frames on the daily chart, for example, based on this butterfly that we have just discussed, well, for you the task will be to take the position as close to the top as possible, because this actually will be an invalidation point, and you need to minimize your risk. So once market hits the 111, here it will be very small risk, approximately 20-30 pips. And here you could think about taking the short position if the character of the action will not change, if it will be the same slow, gradual action. So that in two words that you could keep an eye on depending on your time frame where you trade and depending on your view on the situation.